All right, everybody. So we're back this afternoon, as promised, with our stock of the week. Let's get into it. We won't keep you too long. Interesting market day, right? We started out blood red, and right now we're making the recording. It's about maybe 1:30 Eastern time, and the Dow's gone green, and the S&P looks like it's threatening to. So a little bit of consolidation after that huge run up yesterday. So now remember, guys, last week we gave you CCI. Now we gave that to you for a couple reasons. One, it's $150, $155 stock, but it's available under all the slice or partial share programs. So even at Schwab, you don't have to have $155 right off the bat to own a share. You can buy partials, and that's a great way for a small new or a small portfolio to get started. You don't want to put everything in risk, especially the smaller portfolio, the more that risk magnifies, especially if you lose a trade or two, right? So we always want to be able to fit it into a portfolio of any size when we recommend these. CCI, again, you've heard a lot of talk about Warren Buffett and Charlie Munger over the last couple of days, right? And what's the talk been? Well, they missed the tech rallies and stuff like that, right? They're hard-headed about tech. They were coming out crapping on Bitcoin and stuff like that, right? They just don't understand it, and they're from a different time. But we always want to follow that base Warren Buffett philosophy. What is that, right? The stock market is a vehicle for transferring wealth from the impatient to the patient. And how do you do that? Well, you buy great companies, you hold on to them, and you let the compounding make you money for a lifetime. CCI fits that, right? It's got a great balance sheet. It's got a great chart. It's profitable. It's got a great dividend, right? But as opposed to what Warren Buffett puts in his portfolio, we put the same type of stock in, but it's a tech stock, 5G towers, right? So yeah, take a look at CCI if you haven't. It's a great stock. Today, let's get into something different. There's been a lot of talk about oil, right? Oil's had a good run here lately. Over the last few weeks, right? It's really moved up over that $60 a barrel level. It looks like it's ready to make a move, maybe 75, $80, depending on how things go. But one thing's for sure is consumption is growing, right? We're starting to reopen the economy. Travel is becoming more common. Airlines, I just saw a report, National Hospitality Report, and they were remarking how the Hawaiian area is starting to show the first big signs of reopening and growth and things like that, which is huge, right? When you think about it, airlines, right? You can't swim to an island in the middle of the Pacific. You got to fly a plane, ride a plane, or you know what I mean? You got to ride a boat, blah, blah, blah. Travel is becoming a big thing in the United States. Guess what? We're rolling into spring. Summer's right around the corner. What is that? A lot of July 4th, things like that, travel holidays. So the future's looking bright for oil right now. And then on top of it, you've got like these closures of pipelines and stuff. This is not about politics, guys. We just want to get into the facts. Closures of pipelines and stuff, and that kind of pushes oil prices up even more. Let's take a look at a company that fits all that criteria. But on the balance sheet, it's been a little bit of a turnaround during the COVID. They were profitable going into the COVID, like many oil companies, and then coming out of into the COVID, they started losing profitability for a couple quarters, which made sense, right? The oil prices coming down, the consumption's down, a lot of things working against them. But recently, just recently, they released earnings and they're back in the profitability. Their dividend is awesome. And it's a nice less than $10 stock. So let's go take a look at it. Now we got onto oil and we've decided to share this with all our viewers because we've had a lot of members say, hey, I want to get into the oil a little bit. What should I get into? And of course, ExxonMobil comes up, things like that. Chevron, whatever, OIH, which is the big ETF. But let's find something that is starting to show life, but it's got a potential for big growth, right? ExxonMobil, nothing wrong with the stock, nothing wrong with the company, but it's already matured, right? Let's get something that we're kind of in that big growth phase. So without further ado, I bring you Energy Transfer. ET is the symbol. ET, Energy Transfer LP. We'll go take a look at a chart in a second. But this is a company that was nice and profitable, traded around $15, $20, pre-COVID, like a lot of oil companies, in fact, almost every oil company got beat up during the COVID. Just recently had an earnings report where that profitability is back, but the dividend is strong. You're getting about a 7% yield right now on that dividend. Okay, so let's go take a look at the chart. Let me share screen here with you guys. All right, and there you go. There's your chart. So when you take a look at this, guys, you can see pre-COVID, right? Traded really, really nice right there around that level. Let me move this out of the way. Right around that $16, $17, $15 level. And it held real strong and a great dividend, right? 30 cents, 30 cents. You see that dividend held strong, right? That dividend until the COVID, you see that first period of the COVID, second period of the COVID, then they cut it in half and then it half again, right? And now they'll bring it back up as they establish profitability. They did that because if you look at the earnings announcements, they went from 13 cents a share, losing 30 cents a share, back to making about 30 cents a share, 20, 30 cents a share. Their balance sheet has repaired itself. They're now back in fiscal profitability and stuff like that. And the price is great. And the chart's great too. You can see we had our members, we had this as a buy under $7 on our growth list. We have a list of growth stocks for members that were looking for ideas that fit the same criteria that I talk to you guys about every time I release a stock of the week. That Warren Buffett, right? Compounding, great balance sheets and stuff like that. Well, we like this back here. We saw the opportunity. So our members, we had to buy at $7. We just raised that buy limit to $9. And the reason is stock's starting to break out. Things are starting to happen, right? The US, we're starting to reopen the economy. We're starting to see good labor reports, good economic reports. Things are opening up. Consumption, right? Consumption is starting to take effect with oil. Travel is going up. I just saw a hospitality report, national hospitality report, and it was talking about how our region, the Hawaii region, is actually the first region that's showing real true growth spurts right now, or signs of it. And that of course includes, right, we're an island in the middle of the Pacific. You have to ride a plane to get here, ride a boat to get here. Once you get here, right, if you want to travel to the different big tourist things, you got to ride a plane, right, island to island and stuff like that. This is just a small contribution and just the first stone in a big domino effect. So as this happens, ET should regain its heyday here. And it's showing it. And so we're not guessing on this, right, guys? We're showing the economic growth on the balance sheet and stuff. So we're following our criteria. You guys get a chance to take a look at ET. We like it for the future. We think it'll go right back up to that $15, $20 level, maybe even higher, right? A lot of these stocks got beat up over the COVID, have come out of them at even higher levels than before the COVID. Oil has been a lagger, right? All your oil stocks have been a lagger. So now is the opportunity. You don't want to buy too early and sit on dead money for a long period of time. So a lot of times the smart thing to do is wait till it starts busting out and then get in there. But again, this is a great long-term hold, guys. So take a look at ET. That's our stock of the week. We own it at under $7, but we love it under $9. We were just talking about it. We got our dividends recently, 7% on the dividend. Let's go take a look at that. And you can see it on here. So you got about 7.5% on the dividend. You can see right now it's trading at about $8 this morning, about $8. So you can get in there and get it way before that $9. And it's a great little company. It's a Dallas company. We know there's a lot of good stuff happens with oil in Texas, right? All right, Cowboys. Anyways, let's go ahead and call this a report. Let me get you back here. All right. I'm a little older, guys, so it takes me a while to jump screens and stuff. I'm not like the young kids. So I apologize for that. But look, guys, all joking aside, take a close look at ET and don't forget to go look at CCI too. Now you got two great stock ideas. You got one with exposure to oil, but you don't have to buy a big heavy stock like Exxon or anything like that. We've got a nice under $10 pick here with a great dividend. How often do you find a great stock a good company in a good growing sector with a lot of promise that's paying a 7% premium, right? So go take a look at ET and CCI, another one. It's a little bigger of a stock, but it's available to buy in partial shares. And it's 5G, right? What's big? 5G. Everybody talked at for the last 2 years. That's the most asked question I get is, hey, what are you going to play in 5G? I say CCI, and they're like, let's don't be part of the crowd. That's a great find. So go ahead and take a look at CCI. But first, go take a look at ET, man. It's a great little company. Like I said, it's rebuilt its balance sheet, so it's nice and profitable coming out of the COVID, and that's while we're still at the early stages of this economic expansion and the opening up of travel, right? And don't forget, we're already in March, so we're rolling into spring. And what happens in the beginning of summer, right? We've got July 4th, which is a huge travel day, and just rolls from there right up all the way to Labor Day. So let's see how that goes. But take a look at ET. All right. That way you don't have to buy some big whale like I said, Exxon. OIH, I mean, that's an ETF, and it's so volatile. Is it really what you want in your portfolio, that volatility? Look at the stability of this stock, right? And the consistency of the dividends. All right, guys. So look, you have a great Tuesday. It's been an interesting day, right? It's about 1:30 New York time, about 8:30 here in Hawaii in the morning. But that market was pretty ugly most of the morning. The Dow just went green, and S&P looks like it's threatening to go green. So go green. Anyways, guys, have fun with that ET pick, man. We'll be back with the morning update tomorrow. And as always, we'll have another stock of the week next week. All right. Thank you.